Hello, this is Mike Swanson, Wall Street Window. I'm here with David Skarica, runs the website addictedtoprofits.net. How you doing today, Dave?
Pretty good. How you doing, Mike?
Oh, it's good to talk with you. I don't think we've done a video in probably a month, maybe longer than that. And so much has been going on with the stock market and the world of crypto. Before we get to the stock market and the rally we've been having, let's talk about crypto first, because it's all in the headlines. This TFX exchange, uh, scam people out of billions of dollars. I read a story this weekend that in Singapore, the they have an anti scam department, and they were calling people up that were getting phishing emails to they were targeting these scammers were targeting people who lost money on TFX with phishing emails. Give us your account, we'll give you your money back, kind of thing, and scamming all these people. And the police there had to stop it. And one person they contacted was about to commit suicide. So this is some really crazy stuff going on in the world of
Well,
crypto.
I also saw somebody post something. Always on the internet, you never know what's true and what's not. But I did see someone post something really interesting that like it looked like it was coming from FTX. He had an account there and stuff. Like they were almost trying to when the whole thing was blowing up. It looked like it was coming from people associated with FTX too. They were almost trying to hack his own bank account and get money out of it. You know. As I guess just to get money out of the all the clients and the final ditch, the last gasp of the scam. So it's kind of interesting. I live in the Bahamas, and of course it's happened here. And this guy he lives at Albany, which is this kind of like high end. I don't really like Albany, actually. Just so you know, it's a real tourist trap. But it's just like resort, and I guess all him and his cronies live there. And and then another twist to it is they're doing the Chapter 11 bankruptcy, but remember, this is not an American company. It's kind of weird in a way. You think about them filing for bankruptcy in the US. Now they do have a US arm of the company, so maybe that arm of the company is doing it. But like the offshore arm is like a Bahamian company, and it's an offshore company. So really the Chapter 11 bankruptcy really has no jurisdiction over the foreign arm of the company, which looks like is part of it that really kind of blew up or whatever. And actually, there's a couple of interesting things in how it pertains to crypto. I think that one reason we haven't, you keep wondering, like, how come Bitcoin's not 10,000 or something on news like this, right? Or how come it hasn't fallen more? It's gone from whatever 18, 19 to 16, but that's not, especially when it's already come down from 60, right? That's not some huge move lower. I think what it is remember, a lot of these exchanges now can't redeem funds because they were leveraged, they lost money, and they don't have the funds to meet the redemptions. Well, that means people can't get into their account, sell their coins, and get their money out. So in a way, these these exchanges going under means you can't have the liquidation selling. So it's actually kind of the prices aren't maybe falling like you think they would.
No one could, they can't sell it, so they can't make a fall. That's crazy.
Yeah, yeah. I think like that's like I know there's a lot of people and a lot more, but I think just basic common sense would dictate, yeah, if these exchanges don't give people money and you can't even log into your exchange and trade or anything, then it's like, well, yeah, that's going to prevent you from kind of selling. And then but at some point, when these exchanges, they'll get liquidated and just do whatever, pay out whatever they can. But the issue with these exchanges they're going to have is people talk about when Bernie Madoff, you actually go look at it, like something like 80 to 90% of the funds have now been repaid to his investors. And that's because, he had a lot of money just sitting in a bank account, and then a lot of his own assets and companies' assets, they were kind of liquidated and sold, and then used to pay off investors. Well, the problem with these things is that, a lot of these exchanges leveraged up huge and then lost all their money in the crypto investments, and they have 10 times more debt than they have in assets on the balance sheet. So really they're just totally defunct and completely bankrupt. And as you know, in any liquidation or bankruptcy, it's the creditors, the people that loan them the money that get the first dibs, not even the people with the accounts. And most of those crypto exchanges had things like little like statements that, if something like this happened, like the coins are almost theirs. you know?
Right.
Yeah. So, because, because like I said, and also the thing with the Bahamas took all the assets of FTX. And it looks like what's going to happen here is that the government will just kind of liquidate it. And I don't know if they'll pay off the holders 10 cents on the dollar, or they got to pay off the creditors, but they're going to be kind of in charge of it. And I think like what they're going to do.
Well, it looks like I lost you there for a second.
I don't know, you froze up.
Yeah, there you are. You're back.
Okay.
You're coming back
Okay.
now.
Okay.
Yeah. So it's a mess. There's no doubt about it. But you were telling me, I agree with what you're saying before the air, that one thing that's going to happen. I was, so many people younger than us that say, or not, that might even be the way to put it, but people that got new into the markets in the past couple of years, crypto was a very important part of what they're doing. It still is. And here they, had all these promises of all the money they're going to make, and it isn't paying off. And for some of these people, this is all they've done. I worry that they're going to be wiped out or give up on trading and investing forever because this experience has been so terrible for them.
Yeah, I think that like one thing I was talking to you off air, all these polls are showing that you look at millennials aren't really interested in stocks and bonds. Now, maybe it's because they grew up when the financial crisis happened. Like, we're older, we're Gen Xers. So it's like, we've seen these booms and busts, but maybe because when millennials were like, 12, 13, 14 years old, they saw their parents or people they know lose everything in both the stock market and housing markets. They're not as interested. And it seems like they're really interested. And in most of these polls, so like the crypto is their number one investment. And I think right now, what's going on in crypto, forget what you think longer term the future is. The actual bust is similar to the NASDAQ in 2000 or Nikkei in 1990 or stocks in 1929. This is one of these huge busts where probably 80, these things are going to lose 80, 90 to 95% of their value. And I just think what will happen is when that happens, this generation, kind of like the people that grew up in the 30s and 40s are going to start becoming very risk adverse. And if you mix that in with the fact that interest rates are now higher and you can actually get a real yield on something, I just think like, we all just keep thinking that like, because of all this technology and all these booms that we get, like people are always going to want to speculate. But if they get wiped out totally, and also like, remember, there's other things too. Like, remember, a big part of these people that speculate in this are the types who work in Silicon Valley. And those people tend to have good, high paying 6-figure jobs. Well, Twitter, Google, Facebook, they're all announcing huge layoffs. So that means these people aren't going to get those cushy 6-figure jobs as well. Plus, they lose a bunch of their money in crypto. And there's another thing that they're not taking into account. Crypto's only been around since 2009. We've never seen it in a real recession or downturn. And I know, from being there in the past when I have made mistakes in the past investing, like when the economy goes bad, your own business goes bad, or you lose your job and your income dries up, sometimes you just have to sell your investments just to live. It's not like, oh, I can hold through this coin going down. Like, it's easy to say like, oh, in 2001, everyone should have been buying Amazon at $5 a share, which adjusted for the split is like, 25 cents a share. And now Amazon is whatever, $100. But the problem is how many people in 2001 were losing their jobs, and, it was a recession. Same thing in 2008 and 2009. It's easy to say, man, if you would have bought Las Vegas Sands at $1 a share, you would have made a killing. But if you're losing your job and you're just trying to make your mortgage payment and you're just trying to get by, sometimes you have to just liquidate what you own just to survive, right? So I just think that you got like, those people that kind of own crypto probably are a lot of people in the tech industry as well. So they're at the epicenter right now of the downturn and the layoffs. And then, and then also this is, and it's kind of similar to the 1929 in that if you remember, stocks were the Wild West back then. There was no SEC. If you ever read about Jesse Livermore or other people, they used to like corner these stocks and pump and dump them. And so crypto is very similar in that regard. So Now a lot of and when regulation first comes in, usually it goes from no regulation to being overregulated. So what you're going to see, I think, is going to be very, very difficult for these new things to really start up in the short to intermediate term. So it's a difficult situation, for these people. And I think that if they're just going to be interested in crypto and they're going to lose, and many of these coins have lost 80, 90, 95%. That's going to take years and years to come back. And also, too, people will look at 2017 and say, well, crypto went down 80% in 2018 and came right back. Well, we had the pandemic, we had rates being dropped back to zero, we had trillions of dollars printed. I don't think you're getting that again. It's like, again, if you're going to look at tech in 2000, this is your best case scenario. The NASDAQ didn't reach that high again for 15 years. At the bottom in 2009, the NASDAQ was still 70, 80% below, its high in 2000. That was almost 10 years later. So I really believe something like that would probably happen in crypto here.
Well, to me, one interesting thing about this crypto TFX story, or is it FTX, right? FTX, is at the same time. Oh, I mean, I'm not. To me, these are just maybe part of a bigger thing happening. But at the same time that this story's happening, there's this whole thing about Elon Musk and Twitter, the past couple of weeks. But and he's laid off a lot of people. But so has Mark Zuckerberg with his Meta company. They've laid off thousands of people. And this woman with this Theranos scandal, she got sentenced to jail. Amazon is laying off thousands of people. And a couple years ago, there's a company, WeWork, that went bankrupt. I'm just thinking that, when I was in college and started trading, the internet stocks are red hot. And that was like the beginning of this mania, or I don't even know what exactly to call it, but this idea that tech, the internet, computers, that's the way to get to get a good job, move to San Francisco booming, Silicon Valley booming, high tech, and all this kind of stuff. And that lasted for years. And now I'm wondering if with these layoffs and scandals or whatever, if that's kind of coming to an end. Like, this is the end of an era that's actually happening.
Yeah, like I thought like the secular bull market had ended in 2000s, and we had that huge kind of mania in the tech stocks and internet stocks. I was like, well, this is like the Nikkei in 89. And, like a lot of these things happen decade long, right? Like, 29, 89 Nikkei, 99 tech. So I was, 79 would have been commodities, right? For whatever reason, they tend to blow off at the end of a decade. So I was just like, oh yeah, that's it. And then the financial crisis happened. And then, we had 13 years of all this QE and zero interest rates and an inflated, and what's all these assets again. But I kind of agree. I think that, and that's combined with that, by the way, because I think it's the end of the era of all that trillions of QE.
Yeah, that's the key. That's the key factor.
That's the key factor that would really drove it. So, and it really does look like that is over now. Like, it does look like, with these rates going up way faster than any, tightening cycle the last 40 plus years, it does look like that era is over. But I think you still have people holding on, thinking like, oh yeah, again, thinking, oh, it's like 2018 in crypto, we'll go right back up the next 2-3 years. And then probably what will have to happen in the next phase, this is kind of the bust phase, and a lot of people have just been wiped out that way, but the people that are left will kind of sit there and hold this stuff, and then it will grind lower. Even if crypto doesn't even have to go lower at this point, but it could just do nothing for years and years and years, and then people kind of just give up in the next phase. Like if you go look at a sector that was kind of ahead of the curve, was like all these 3D printing stocks like DDD, SSYS, they all blew off in 2014, right? And they have now done nothing for 5, 6, 7 years after that. Like DDD went from 8 to 100 back to 8 from 2014 to 2015. And now it's still at 8 or 9, So I just think that that's kind of like what's going to happen with this. And you can see like on a, on that log scale, you can see DDD. Yeah. So like, look, now DDD's now done nothing. It kind of blew off with the market in 2020, 2021, but really now it's done nothing, for years. And like, someone who bought it in 2016 or 2017 when it was $7 or $8, I think, or as low as $5 in 2020. Oh, this is a cheap stock, and it really just hasn't done anything. I think that's the next phase, that you had the huge blow off like DDD did in 2013, 2014. And now we're kind of in the bust. Those busts happened by the way, about 2 years. That's what happened in 2014, 2015. And then it does nothing for years and years and years.
We can look at this stock as something similar.
Yeah, I think,
Aurora Cannabis.
Yeah, this thing went from over 100 to, and I think there's a lot of similarities in the cannabis stocks to crypto, in that they were the hot sector. They were kind of story stocks, even though these things weren't really making any money, or and now it's like they're all down 99%. And actually, I think some of them are worth looking at in the cannabis sector. But the problem is, are they really, are they going to do what now the 3D printing stocks have done? Does it mean just because they're cheap, they're going to go straight back up? They could take years and years and years. Type in SSYS. That's the other big one. And you can see that's the same thing.
Yeah.
It busted and then it's just done nothing.
Mm. And then here's the Coinbase, which is down 7% today.
And that's another issue too. Is it's kind of like, again, talk about 1929. You remember what happened in 1929? None of the banks, it's a much larger macro scale, but none of the banks trusted each other, right? So what happened? What happened was, no one would loan to each other, and people were taking their money out of the banks thinking, there's all these bank failures. Well, like Coin is probably the biggest and probably most trustworthy of the crypto exchanges, but people are probably liquidating them too. Like, their accounts, forget the stock, probably getting their money out thinking that's it. Like they could go be the next one, So.
Well, what's your take on the stock market? We've had this rally since October.
Well, what's interesting is I think it's similar. Again, you go to the tech bust, and the tech bust, if you look at the three main indices, the Dow, the S&P, and the NASDAQ, they all traded different. Like if you looked there in 2000, like the Dow was kind of like now. It wasn't as overvalued as the other ones. And then it took a long time to break. Like the Dow didn't really break till about September, that September 11th sell-off, and that's when it broke hard. And if you go look at it before, the Dow was almost just in this big range for like 18, 19 months before that sell-off, where the NASDAQ acted much weaker during the bounces in October of that year. And actually very similar to this one, where the NASDAQ kind of bounced off the lows. If you go look at, that was roughly the spring lows. Like, we're just above that right now. And then NASDAQ had like a weak bounce in October of 2000, similar to what happened just the last few weeks now. And it does look like at some point, probably maybe as we go into Christmas or the year end, especially with a lot of tax loss selling probably out there, to finish off the year, it does look like the NASDAQ will probably break to new lows, where the Dow is holding up a bit. And then the S&P, because it has a higher tech weighting than Dow, will kind of like trade in between. But it looks really similar to that 2000 scenario to me, where tech's going down the fastest. The S&P, because it's more tech weighted, is going down second. And then the Dow, I think too, there was a big move. Like, I don't know how big it is, like how many people are running into it, but obviously people were going into McDonald's and Visa and these sort of companies when they had some, like you can see McDonald's almost at all-time highs when they had good earnings during the earnings season. And, you can see Visa had a big move too from 175. And I think maybe there was a small shift out of Apple, Amazon, Tesla. They're all acting horribly. Tesla's down another 5% today to 170, and 6%, 169. So you can see that, like, these kind of things are acting really poorly,
Yeah, I looked over the weekend at stocks. I looked at all the S&P 500 stocks and Tesla and Google. Even though you see Google bounced here, these two stocks are among the worst performing stocks still
Well, look,
in the
look at
past 90
Amazon.
days.
Look at, and I think that's important too.
Yeah.
We talk about the economy, and we're talking about these companies doing layoffs, but just forget that. These are the stocks people own. Like I showed Microsoft, I said, okay, there could have been a little flow into McDonald's or something, but these way more people own Microsoft, Amazon, Tesla, Apple, these companies, Google, then own like, some of these big Dow companies, like own Caterpillar or something, so that's another issue too, is that people are not, there's another stock that like gapped up and went up huge. Right. So, I think like that's a huge thing too. It's negative for kind of like we talk about that wealth effect in the economy, because those stocks that people are probably mostly in are going down.
Well, I mean, yeah, I'm not so much. I mean, it's Monday, Thanksgiving week. It's historically the market goes up this week. Odds are better to go up this week than any other week because no one's in the market.
I think
But
once you get into that Tuesday of Thanksgiving weekend,
yeah,
because Wednesday before Thanksgiving is like the biggest travel day of the year, right? And then Tuesday, people are probably getting ready to travel, right? If they are going to. So I think once you get into that Tuesday, it becomes pretty dead. Like I think maybe there's some stuff going on today, but I think starting tomorrow, and yeah, I did I had to do some updates today because I had something happen with one of my positions and a couple other. Actually, I own some short positions in Nvidia and Tesla, and I sold them today. And I was just like, I bought Nvidia back over 160. I got back in. So I had some puts pre-earnings. It hasn't gone down huge. It's gone from like 160 to 153, but I sold the puts a bit. And I bought the NVDS, which is the Nvidia short ETF, and that's rallied a little bit. So but anyhow, other than that, yeah, and like I have a unique thing going on. I think most of my subscribers, people know me. I like football, and I like European for like soccer. And because this year's it's in the Middle East, the World Cup is on in November and December. That's what I had on in the background actually when we started this.
well,
So to me, it's like the only time.
Back to the game in a few minutes.
Yeah. Actually, the U.S. is playing right. Actually, after we do this at 2:00. But anyhow, it's like the only time in my lifetime where I'll have NFL football and the World Cup on at the same time. So it's kind of like, why not take a few days off? And
well, I don't. It doesn't feel to me like much is going to happen this week. Maybe not next week. I'm a little. I don't. We're having a bear market rally. There's things I think are better to buy that I think I'm more bullish on. That I wrote about. I'm interested in foreign markets and gold and commodities still, but the Nasdaq is the worst performing thing. Still. But I think it can hold in there for a little while. But
yeah,
I don't know about the end of the year, like you're saying, tax loss.
Yeah, we haven't talked about gold, and it does look to me like gold has bottomed and is starting a slow like uptrend. Starting to move higher. But again, we have to look at this realistically. It's like, because I don't see the Fed, after they raise rates to 5% or whatever, I don't see them, tapering or forget tapering or cutting rates anytime. Anytime quickly. So it's like, if they're not going to move quickly, it's like, I think gold is more like what it's going to do at that 2001 bottom, rather than the 2008, 2009 bottom, when it had kind of this V bottom and went straight up. I think it's more going to be like, a bottom where it kind of slowly moves higher, for months and months before, if you go look at that 2001 bottom in gold, gold kind of moved. Yeah. Gold moved very slowly higher all throughout 2001. And then the first half of 2002, it had a really nice move. The HUI moved up to 150 before correcting that summer. But that's kind of what I think here. I think that we're more likely in that kind of slow move higher than rather some, because I think that when the monetary policy shifts, and I don't mean you don't have to have huge rate cuts, but if rates go to 5 and just then go back down to 4 or something, that's probably when gold will explode.
When you
But
talk about moving slowly, you're like talking about this period, I think, right?
let me go look. I'm looking at charts myself. Let me go look at what you're posting. Yeah, like look at that 2001 period. Like I don't know if can you put up the HUI because
Yeah, sure.
you'll see that too. Like the HUI outperformed, but you can see like there was a good move off the bottom, and then it kind of consolidated the second half of 2001, and then go look at that huge move the first half of 2002. So I would think that yeah.
Yeah, and for those that don't know, you cut off again. Might be on my end that the problem's happening. Um, but I first bought mining stocks here in early 2002. Um,
You're okay now.
yeah, okay. Yeah, I think it's on my end. It says, but anyway, yeah. I mean, it's funny to look at this chart. I first bought mining stocks in January, February 2002. And that's when I first met you or talked with you. And then we met shortly later.
Yeah.
Um,
Yeah, and it's like you go look at that first move, like it was a good percentage move. The HUI doubled off the lows, but you can see it wasn't even back to where it was in 2000, when it was say like 60 or whatever, and it's
yeah.
like, yeah, and it just doubled because it was so beaten up and low, like if you go back to like 97 or 98, you'll see the HUI was, I think, 150 or something, so yeah, you see right there, yeah. So that's kind of what I'm looking at here is, yeah, I think 2001 or 2023 could be very similar to 2001. And then we kind of choppily move higher. And that would make sense because if you go look at the Fed funds futures, they're saying like maybe fourth quarter next year, they start to cut rates, right? So that kind of runs in line with this, But the great thing about this, Mike, is that like this was not just like 2018 to 2020 or 2009 to 2011. This was the start of a massive 7 to 8 year bull market in the gold stocks. Like it just wasn't like something that lasted. Yeah, go to like 2008 and you'll see that. You'll see and you could even argue it was the start of a 10-year bull market because even that 2008 crash was so quick, it went back back up.
It was.
And anyhow, it's just like so yeah, I that's why actually I'm pretty positive because you go look at the gold stocks and the type of bear market that they've had, it really does look. Now, if you want to take the 10 years, you might use the 2005 low as the low, but that would still mean we have another 4, 5, 6 years left,
Well, I believe that it's highly likely that the US dollar is actually topping out and rolling over. So that's I think that's what appears to me to be happening. So that's one reason I'm real.
Well, again, if you were to go and look back at those charts we just showed, what you'll see is like the US dollar back then, it had a big move just like it's had now, and it topped, but it was like similar, like it didn't just top and go straight down. It took most of 2001 to top out, right?
Yeah,
so
right.
Next year again could kind of be like 2001. The US dollar could slowly top out, whatever, between 105 and 115, and then finally roll over when they start to do those rate cuts. So yeah, I don't think it's gonna, it's very oversold now and it's had a big move off the, but to me, that's what it looks like to me, that we're kind of setting up this. And remember, these currency things can take forever. Like if you go look at the US dollar bottom from 2008 to about 2014, right? It took 6 years to bottom.
Yeah. Currencies move slow.
Yeah, currencies move slow. They don't have to just go straight up or straight. And that's what I would think. The next year or two is probably the topping formation on the US dollar. And then, but kind of like, again, 2001 to 2008, will probably have a pretty prolonged decline once that gets underway. And again, if it makes sense, if you look at everything going on in the world, like probably over that 2-3 year period or whatever it takes to top out, Europe will kind of start solving a lot of its energy problems, because that's one of the things really that weighs down on the euro right now, because the cost of doing anything in Europe, living there, business, everything is so expensive because energy is so expensive. So once that happens, that will probably give some tailwind.
Well, at some point, this war of Russia and Ukraine will end. I mean, it's not going to go on forever.
And let's face it, they're not going to just leave those sanctions on Russia forever. Okay, maybe on some things they will, but on something like energy, probably when the war ends within 6 to 12 months, you'll see the energy, those kind of sanctions lifted. Yeah,
we might not be able to trade this. We may never be able to trade the stocks again.
Remember able to trade Russian stocks again. Yeah.
But that's not on the New York Stock Exchange, but that's
that's for another time. Yeah. Well, maybe one day on the Russian exchange. They are like the cheapest stock. If you're not someone who's too worked up over the war, I'm not going to get into the war, but they are like the cheapest, like highest dividend paying stocks in the world. But I think that's kind of, I'm just thinking about that interview where that guy, that Russian trader.
Yeah.
That
was funny.
That he's going to start working as a Santa Claus. So,
well, I'll let you get back to the game in a few minutes. And thanks for taking the time to talk to me. And if anyone wants to get more information from you, they need to go to your website, addictedtoprofits.net.
Yeah, I know. So, okay. Thanks, Mike.